here for the Sunday night live stream here on Casey Trades X profile and the YouTube channel with a special guest this evening. Tuning in with us is the man, the myth, the legend, Will. If you guys have tuned in to the Wolf Financial Spaces in the YouTube, you've seen Will over there plenty of times. One of the absolute best guys on that panel. One of the most knowledgeable and probably smartest guys I think that I've uh, had the pleasure of speaking to on Spaces. You probably know a lot more than
Yeah,
majority of
appreciate
every
that.
single person that I know when it comes to talking about the market. You're because I mean, you sent me
Yeah,
messages before in the DMs, and I'm like, this dude is he knows his shit. And then you start telling me stuff, and I'm like, hold on, let me pull this up on the chart real quick so I can see what he's talking about. And then I've just continued to soak in a lot of things that you talk about. So you've been teaching me things along the way. But we have Will here with us this evening. We're going to go ahead and get the link posted out in Discord.
yeah, let's do it. Yeah, no, happy to be here. I love I reached out to Casey the other day. I was like, "Hey, I'd love to come on the Sunday live stream because I think what you're doing is great. I love doing like a weekend recap. Like it's always something I wanted to do, like get on here and really cover stuff when the markets are closed and we can kind of go through and talk about ideas. Because sometimes during the trading day, like we look at stuff and stuff's moving and we don't get to really unpack a lot of these charts. And I think there's some definitely some unique opportunities going on in the market. I think we got some good trade ideas tonight we can share that are coming up, and then we got some event risk coming up this week that I think Casey's going to talk about here.
Yeah, yeah, absolutely. Make sure we are live on X. We are live on YouTube. My YouTube manager over there, Liv. I appreciate you. Make sure you do go over to the YouTube channel, like and subscribe over to that, and put the notification on that we do not miss any other post videos or live streams over on the YouTube side. If you're watching this live stream on X, if you could please go ahead and like and repost the stream. This will be recorded to my X profile as well, recorded onto the YouTube channel. So for the ones that have other obligations and things to attend to this evening and cannot attend this charting and educational session live, they can watch the recording of this later on tonight or earlier tomorrow morning before next market open. That way they can see the material that we covered about. So the more people that like and repost it, it will be easier to find. So we greatly appreciate that. We have FOMC this week. Oh my goodness. I know that's only the main thing everyone's kind of looking at for Wednesday, but just quick breakdown. We have no data going into tomorrow, which is good. I'm going to start off the week with no crazy movements, data, whatever it is, pre-market. Hopefully, as long as Trump doesn't send a tweet and Sydney Sweeney doesn't partner with another company, we should be a-okay. But no data tomorrow morning. Tuesday, we have job openings data. It's a delayed report at 10 a.m. Wednesday, obviously, is the big one that most people are going to be looking at. We have FOMC at 2 p.m. Eastern, and then our man, Jerome Powell, will come on at 2:30. And then Thursday, pre-market at 8:30 a.m. Eastern, we have initial jobless claims. And then Friday, we have two speakers, 8 and 8:30 in the morning, nothing too crazy, and wholesale inventories at 10 a.m. Obviously, the biggest thing this week is going to be FOMC for Tuesday. So make sure you are aware of that going into this week. We could see maybe some more stagnant and slower price action across the board, back and forth, choppy, range bound on a few names until we see how the market reacts with what we're going to be getting from uh, the Fed and Jerome Powell for FOMC on Wednesday, and then maybe see some volatility kick in after that and see how the market reacts to the press conference and the data from that. But
Yeah,
that would be the big thing.
we got another inflation look on. You got on Thursday too. You're going to get PPI as well, so you'll have a look into some of the producer prices on inflation, and then on Tuesday also, I think another one just for employment is you got the JOLTS data that'll be coming out for job openings. So that'll be um, another clue to the employment market. We saw ADP last week. For anybody that didn't see it, ADP, the jobs number came in at negative 32,000 for private payrolls. And a lot of those losses were in small business. The consensus was to be, I believe, up 40, up 20. So it was a pretty big drop there. So I think Jolts, obviously FOMC this week. And then I think also towards the end of the week, you got what else? Yeah, you got a couple speakers like you were saying. So it's going to be an interesting week.
Yeah, the two speakers, it was who was it? Philadelphia Fed President Anna Paulson, and then Cleveland Fed President Beth Hammer. So
And I
nothing.
think I'm seeing Goolsby speaking on Friday as well, as the Chicago Fed president at
Ooh.
35 Eastern as well. So that
Ooh.
that will be another one there.
Well,
But
we'll see how this market goes this week. But I'm going to go ahead and hand it off over to Will. Will's going to go ahead and cover some of the macro things and main things that he believes going into this next week we need to be aware of. So I'm going to go ahead and let Will, he's got his chart up there, and go ahead and break it down for us to start it off.
yeah, so I wanted to cover first. I want to go through the 11 sectors in the S&P. I think it's really important. We'll start with technology, and this is the XLK. But when you're building a framework of how you're trading, and when you're looking for the broad markets, it's really important for you to go through each sector and see where they're trading relative to the moving averages, where they're trading relative to support and resistance. Because when you can try to unpack the heavy weighted sectors versus the lighter weighted sectors, to see how they're acting is how you're going to be able to build a broader context of where the markets are going to go from here. So first one I got pulled up, just simple, just keep the chart simple, is the XLK, which is the technology weighted ETF, which is about 35% of the S&P. So it's the heaviest weighted sector. Uh, Obviously, we had the big move up in over the Thanksgiving timeframe. We kind of broke out over this trend line. The positives are you got all the moving averages about to pinch and go up, and obviously it looks bullish right now from here. So technology, that's the first one. So that obviously looks good to keep going higher, which we expect. And we do got some earnings this week that we'll talk about. Second one is financials. Same thing. This is a little bit more of a choppy chart in the last couple months. We've just been drifting sideways to the right to lower. We finally got some movement. Casey, I know you're talking about Bank of America and JP Morgan, a couple of these other names a few weeks ago that were really
Yep.
some really good trades off the bottom. We went down, tested that 200 level. We rallied up, and financials look good and above the moving averages. So now you got to work with this. You could call it a short-term double top here from Friday, but any move higher obviously would be helpful for the S&P. But pullbacks, as long as we stay above these moving averages, probably buys and financials. So, and that's obviously the second biggest weighted component in the S&P.
Mhm.
Third one, this is going to be driven a lot by Tesla, which is the XLY, which is your consumer discretionary. And some people say it looks a lot like probably the Tesla chart. You can probably be very similar. But you kind of got back into this congestion on the XLY. You're back above these moving averages again here, the shorter term ones. So as long as, again, third heaviest weighted sector, these continue to the right, probably pushes to at least go test, 121 in the XLY. What do we got next? Communications, obviously driven probably by Meta. Meta had a huge week for anybody that, we talked about, KC, Emp, myself, a couple other guys are talking about that Meta down around that 600 level. We did peak a little bit lower, probably in the upper 580s, and that's bounced all the way into the mid 600s now. So that's helped communications push higher. So we broke this trend, got the moving averages again below you now. You got a nice candle on Friday, right into this level on XLC, which is right at the 117 area. So if we maybe, go sideways, we grind sideways this week, and then we could push, you could look above and then probably targets, these all-time highs. What we got next? This is one actually, I think a trade idea for next week is healthcare. Um,
I
I like
agree.
this. I like this chart. I brought this up on Thursday and Friday. Uh, you had big downtrend that we broke. Uh, you broke up. You rallied. You're above the moving averages. You're pulling back to an area where you're right at the 21 here, around this 152, and then you got some levels of support right around this 150. So I think healthcare, the other thing is it's more of a defensive play as well. So healthcare looks good. I'd be buying
Yep.
the healthcare XLV on a pullback here, and that could probably run back up to these highs. So
Yeah.
healthcare looks good.
Healthcare could be one of those things where if the market kind of stays flat and choppy, you're not seeing too much move on tech. That's one of those sectors that will just run and have that relative strength for that period of time. I always like looking over at those names.
Yep. Industrials, as we work our way down on the weightings, getting midway through. I mean, this you just got this big choppy range. So this is you got a balance area basically from 155. We're at the high end of the range. We went all the way down to 148. So you kind of got some congestion in here. So I mean, I would say it's sideways in that one. Obviously, it's a lower weighting. So the first, four look good, I think, to go higher. Then we get into staples. Consumer staples, is a defensive positioning, but you got all this overhead supply above you. However, Walmart, which we've talked a lot about, we're talking about Dollar General and Dollar Tree and a couple of these other names that have been on fire. But
Mhm.
Staples, the chart doesn't look that great. Utilities, this one actually is interesting. Actually, let's go to energy first. Energy, you're above the moving averages. It's been in a choppy range. This is one that's obviously continued to push up in the last few weeks, very correlated to oil. So keep an eye on oil as we go sideways. If you see oil pop back above 61 or something like that, some of the oil names could be in play to go higher as well. And then utilities was one that I saw. I had a trend line. Actually move this a little bit here. Utilities breaking down, which is interesting. And part of that is going to be with the higher rates in the last 5-6 days here. Uh, Utilities are very rate sensitive. So we're getting a little bit of breakdown in the utilities. Obviously, it's lower weighting as well. In the last couple, I mean, just small as you got real estate. Nothing really to talk about here. It's just sideways action. If you do get rate cuts and you obviously have maybe some dovish commentary by the Fed, real estate could be in play to maybe move a little bit higher. And then the last one, just materials, basic materials. Just another one that's just, I would say, in no man's land, sideways. So the important thing is like when you break down all these charts, you need them all in sync to go together. And the big things is when you look at the heavy weighted stuff, technology, financials, consumer discretionary, communications, and healthcare. I would say right now, all those look good. So when we talk about what's the narrative going forward, if those continue to show strength, it's going to help lift the broad market. So those are kind of the sector by sector is how I look at it to try to unpack it. I will say one thing I'm just keeping an eye on is this is the U.S. 30-year interest rates. We have seen a tick up in these interest rates in the last 4 or 5 days, and you're at the call it 3 month high yield. So I talked about this on Friday a little bit. We'll see what the Fed says if this turns around. If this continues to go higher on some hawkish commentary, I'd be careful on the small cap side because those are very rate sensitive as well. So, and then just the bonus chart we'll talk about. Me and Casey talked about this a few minutes ago. This has implications for our bond market, but it's the 10-year Japanese bond has been absolutely on fire uh, to the downside, meaning it's pushing yields higher. So the yields have been straight up. There was talk about hiking rates in Japan, and that will put some pressure on our bond market and the yields. So we need to just keep an eye on this. If this gets pushing over 2%, it could have some dislocation in our markets as well. So that's just into something else I'm looking at. Just keeping the back of your mind. So Casey, I'll kind of flip back over to you for now. Just kind of covered some sectors. I think,
Yeah.
like I said, the big weighted sectors look good. It's constructive kind of for the broad market for now. But again, we got that macro risk this week that could change anything.
Yeah, yeah. No, I absolutely agree. I was just looking over. I saw your utilities, and I was looking at. I think was it? I was looking at VST, um, and VST is not looking too hot right now on this weekly chart.
No,
It's been in a squeeze since October, and it is now flipping. It's bullish, and then during that move, even upside, you had bearish divergence on the RSI. MACD is also bearish. So for me, that's just like boom, boom, boom. That's one, two, three. That's something that I look for to get continuation. And this chart is absolutely looking disgusting. This right here on the daily, it's at the bottom of this range. I mean, that looks like a clear bear flag that's about to break down and make that next leg lower. Um, so keep an eye on this one. The other one I just pulled up was DUK, Duke Energy. This
Duke
thing
Energy,
just
yep.
got annihilated.
Annihilated. Yep. That thing
So
fell
it's
off a cliff.
yeah, so it's testing April 2022 highs right now, and this was an area recently back in May, June, July where it kind of chopped around. So it could find support right here as well. But again, this name is also in a weekly squeeze. It hasn't flipped bearish yet to the downside, but it is moving to the downside. Again, MACD is also bearish. Even then, during this channel right here, when it was making the higher high, higher lows, higher highs on this chart, that entire time there was actually the RSI was just getting just bearish divergence over there until it finally just broke that trend line. But last week was a really rough week for Duke Energy, so you might see some potentially no continued relative weakness over on XLU. So again, this is kind of what we're looking at is if for going into tomorrow's session and then Tuesday just ahead of FOMC. If you're not seeing too much action in SPY or Qs, you got Tesla ripping to the upside. You got Nvidia that's going lower, or just it's a mixed bag across the board for tech, and we're not seeing too much action yet. Just make sure you're going to be looking at all of these sectors that Will was just covering, and then I have a tweet that you can. I'll try and find it and repost it later, but I'll pull them all up right here and then just make sure you're looking at them every single day, at the end of every single day, at the end of every single week as well, or month. TradingView will have all those stats there for you, and it'll show you which one of these has relative strength and relative weakness. If you're not seeing the action on the normal names that you're trading, this is where you can benefit by looking at these individual names and other sectors, because maybe that's where a lot of the volume and rotations kind of moving over to right now. So you can capitalize on when you see that sector, like energy that's having that move to the downside, you can go ahead and play puts over there on some of those names that have the relative weakness. So, yeah, those are just two that I just pulled up, VST and DUK. So just watch
Yeah, the
those.
other
They
one
are,
is just in that space is NEE, Next Era Energy. That one's starting to break below the moving averages. You're kind of in between the 50 and the 21 here. Just keep an eye on that one. That's another one that's in that space that could end up, if we get some more weakness, would obviously be
yeah, you had this high from September and October 2024, this little zone right here, and it just back tested every single candle, went up there, pulled back down, closed underneath of it. This one looked very promising, but then they still closed it right underneath of it, and it just pulled back to the daily or the weekly 9, and then on the daily, yeah, you're now underneath the daily 9 and 21. So you could see potential breakdown. Just I got a level down here just shy of 80 bucks. So you could see the other ones like Duke already obviously had a really decent move to the downside. So you could see a little catch up play here on NEE holding underneath these daily moving averages, just get that move down here, and then if it breaks underneath that, look for continuation. But yeah, it's definitely another one that you can see some more downside on going into this week. So for me, guys, if you're in the premium Discord, you've already seen all of my charts. I shared a lot of them on X earlier. I shared KO and Pepsi, which I'll cover here in just a second. CRM, CoreWeave. I mean, there's so many freaking charts. I think I sent a total of like 20 charts within the premium Discord. I just found two other ones recently I was looking at for a potential upside, which was SNDK and WDC. But we'll go ahead and cover just a few of these right now. But obviously, starting off the same three: SPY, Qs, and IWM. And these are going to be very short, sweet, to the point because in my opinion, I would like to see new all-time highs sooner rather than later. So, I mean, SPY is within reaching distance right now of all-time highs. SPY recently just hit 688.39. All-time highs is 689.70. So, I mean, it just came within a dollar, like 40, 50 cents from those all-time highs. So, just looking at the larger time frame on SPY, I think 680 is going to be a big spot. That's where your daily 9 is at. Even bigger than that, I think is going to be closer to about your 675, 676 area, which is going to be this kind of zone right down here. But going into next session for me, it's if I mark another level just right here with red. These are the four things that I'm mainly looking at. The main thing for a downside is if SPY ends up pulling back down to 680 right here. I mean, previous price action shows that buyers have been recently stepping in, defending this area right now. I would expect nothing more than to look for buyers to step in. If they do, risk reward, like it prolongs, buy the dip, and then take it back up to these potential highs. Now, again, all-time highs are 689. 0.70. Over top of that, I'd say sky's the limit, but there's a lot of bulls out there that are calling for 700. And I mean, I'm not going to disagree with that. I would love to see SPY hit 700 by the end of the year. But going into next session, there's only four main things currently that I'm watching on SPY, and that is going to be the previous all-time high, which is going to be just shy of that 690 area, 689.70, and then this high right over here from November 12th as well. This was also a big area of rejection that happened back in late October as well. So just around 686. Underneath that, 682.3, and then 680 psych level. Those are the main four areas that I'm going to look to honestly play ping pong back and forth within this area until we either see a break of that previous all-time high and a move higher. And then if we do break and close back underneath 680, again, I think we can see another potential $4 or $5 drop after that, back down to this zone closer to 676, 675, which is going to
Yeah,
be
and
around where your weekly 21 EMA is at.
the daily 9 is right at around 680 anyways, so that fits perfect with what you're discussing,
Yep.
where if we pull right back to that daily 9, which is 680.10, that
Yep.
would be a good spot there to see how we respond. If we lose that, like you said, probably opens the door for 674, 675. You got the previous highs in somewhere around the 21 moving average on the daily. So
Yep.
the
Yep.
other thing is when you look at the move we had last week, we had that balance range from call it, I guess, on the high end is where we closed 685 down to 680, and the move was lackluster all week, kind of push pull two directions, and then you kind of had this push up and on the Friday candle, and then we closed kind of at the previous day's high on Thursday.
Yep.
So we need, if we pull back to the 9 and you get some nice responsive buying there, I think that opens up that all time high for sure. It just depends on what we do with that 9 level. I'd like to see that be more healthy than just going straight up to the 9 from here. I'd like to see that 9 be touched, and then we go, we get some responsive buying from there and go forward.
Yeah, absolutely. So again, like if we reject this area here, if we end up moving down, right here is where your daily 9 is at. Just look at previous sessions from Monday, Tuesday, and Wednesday, 3 days in a row. Every time this area was tested, you were getting big buy reactions right after all three times when this area was tested. All three of these actually sent SPY back up to 683 to 684 area. So SPY coming down to 680, even risking this low that's just right down here, this pre-market low from that Monday, which is just above 678. I mean, you can risk, $1 to $2 downside for a minimum, at least for the bounce back up to, 683, 684. So you're going to risk $1, $2 downside for at least a $3 to $4 pop off of that buyer step in. But best case scenario, I would love for 680 to continue to hold. And again, I would like to see buyers really step in, push back up, and eventually take that previous all-time high and get the move up. So that could be a potential good buy the dip area off that daily 9 if you do see buyers start to come in whenever that price action is, if it ends up hitting that area. So definitely something to keep on watch for SPY going into the week. For Qs, I already have a zone that's right up here on a larger time frame. Um, and this area is from the same thing Wednesday, November 12th. So zoom out, look left on QQQ. This was no surprise. So look at where all of these upper wicks are on QQQ. All of these times. when Q's hit this area, big freaking got smoked every single time. Back tested, smoke, back tested, same thing over and over again. So you mark this area, we hit it again right up here on Thursday, December 4th. They sent it straight back down to about 619, 620. We got craziness right over here, wicked all the way up, wicked straight back down, and we're closing directly inside of that zone right now. So QQQ a little bit different story because Q's has a little bit more of a ways to go for all-time highs. Most likely SPY is going to make a new all-time high before QQQ ends up making that new all-time high. But you do have you do have that gap that's right over here from Monday, November 3rd on Qs. The low of that candle is 629. So if we start to see, honestly, what I'm going to look at is the 4 hour going into this week. If you start seeing 4 hour candle closes that break in base over top of this zone right here, they can break and actually close a green candle and start to base and not accept back down into here. That's what I'm going to look for right here to end up going back up and where the top of that gap is to take it back up there. So a break in base over 626 on QQQ, I think is fantastic. If it continues to reject this zone, going to see that move back down to 622 and then 620 cycle level. I think the 619 area is going to be very, very big. If you look at here on the 4 hour, already have this area marked right here, right? This white line in this gray box. You flip it over to the daily. Your daily 9 is right below that. And if you look at where the daily 9 is lining up right below that zone, I mean, you'll see buyers were stepping in, defending that area right here. So again, if you see that pullback on SPY from this area, same thing for Qs. If we see that pullback down to this area here, this is where the daily 9 is going to end up catching up in that session. If price action does start to pull back down, for the next day or two, that would be essentially the area around 620 cycle level on Qs. I would want to see buyers step in. I think good risk reward area there for potential longs to buy that dip. So for me, it's 620, 622, and 626. That's the main thing on Qs. That's my top, that's my middle, that's my bottom. Those are the only three things that I'm going to be looking at for QQQ going into the next session. Unless for whatever reason, tomorrow morning, Qs is well above 626 and it's already at 629, 630, and it filled that gap, then I'll take it from there. I don't really foresee that happening. Again, we don't have any data pre-market either that I think would cause that kind of move. But I mean, anything can happen. But again, these three spots right here, these are all the spots I'm looking at on Qs going into next session. And
Yeah, if we stay above that daily 9, that just is going to continuation for probably further price action
yeah,
higher if we hold that area. So
so IWM, little bit different story. So previous price action shows from October, the second week of October, and the end of October near the 27th. This was an area of resistance right up here. Every time IWM hit this pullback, and then it pulled all the way back down to, honestly, it went down to 240 and it came up here again, came back down, tested again, ended up going down to 240, bounced, ended up going lower after that. Anyways, if you mark that zone from that previous price action that it could not get over and drag that over, we are testing that exact same area again. So go to a weekly chart. There it is. And if you go to your daily chart, this is what it looks like right now. So risk to reward, honestly, looking at IWM and small caps right now, a risk to reward looks good for a short because you can just risk, the previous highs that are right up here, which is going to put you at, 652, 653 area. Your daily 9 and 21 are all the way down here. So if you start to see IWM recently, the last two sessions, outside not Friday session, but Wednesday and Thursday session, big moves to the upside. They were getting IWM was on absolute tear. It was not following the same thing with SPY and QQQ. So if you do see relative weakness in IWM off of these highs again, just know, just zoom out, look left. This is an area of potential resistance. It is now a little bit more extended from the daily 9 and 21. Again, risk to reward looks pretty good for a short in IWM, honestly, to at least come back down and retest the daily 9 and 21 back in this area in the mid 240s. I would absolutely be a buyer down here on IWM back in the middle of these 240s, to see buyers step in. But just the way the last three sessions were on IWM, again, it had that really nice relative strength over SPY and Qs, and then Friday, it ended up getting a double top from Thursday's high almost perfectly, I believe, almost to the penny. If you actually go to
And that goes back
Thursday's, let me
to the
see.
other conversation was just about rates because right about that same time we were getting rejection in the IWM is when you had the 30-year bond pushing to lows, which was pushing yields all the way up to that 480. So let's talk about the chart on the yields early in the week. If you see, TLT, or if you want to look at US 30Y, whatever you're looking at on your platform, watch the yields. If they continue to tick higher, that will put a little pressure on the small caps early in the week if the yields continue to rise.
Yep, yep, absolutely. So looking at IWM, you're gonna have your little pit stop right up here at the top of this previous zone, which is just gonna be underneath 250 area. So going into the next few sessions for IWM, if you do see that relative weakness on IWM, again, staying underneath 252, 253, I think is a little bit more bearish on IWM. And I think once it does a SR flip, potential break in base underneath this 250, then you're going to see this area right here of 248.8 down to 247.8 and then 246.8. That's kind of weird that all my levels lined up at 0.84, 0.83, 0.83. I just did that really quick. But if you end up, again, going here on the daily, this is what it looks like. And look, number three, full target downside is going to line up right there where the daily 9 is at. So again, if I'm going to be looking for IWM relative weakness and it pulls back, those are my three targets, and my full target downside to be exiting is going to be where the daily 9 is, right where that level is. I would expect buyers to step in, so I'd be closing out my put position and potentially a good area to look to flip long. So uh, that is my thoughts on SPY and Qs and IWM just going into the next session.
Hey, Casey, somebody put in the chat, they said, with rate cuts this week happening, where do you see gold going? Rate cuts with the dollar index down, rising yields, Dixie up. So it's interesting that you point that out because the dollar, actually, if you want to either pull that up or I can
Here,
share it, but
I'll switch it right over to your screen.
let me go to the dollar real quick because I want to pull some of these. I just want to look at. So I talked about this a few weeks ago. It's on the weekly chart of the dollar. And actually, let me go. I want to go big picture for a second, just so everybody can see where I'm getting these levels. So the dollar's been in this channel for, call it quite a while, right? This is a big chart all the way back to 2010. And if you look, we kind of came into an area of support on the dollar right around this like 96, 97 level. And then when you go into the weekly, I talked about this, I don't know, maybe a week ago or so, a couple weeks ago. I talked about we're going to run right into that 100 level, which we did. So the interesting part is when you get more granular, the dollar's actually been going down and yields have been going up, which is usually counterintuitive because you would think the dollar should be going higher if yields are going higher, and that hasn't happened. So that's something we got to pay attention to. The second thing is on gold. Um, where does gold go? I mean, at least from a charting perspective, gold still looks good in my opinion. I mean, you had this big run up, right, all the way to call 4,400 roughly. Pull back, you based, you're above the moving averages. We talked about this on stream probably a week and a half ago. Right on this candle, we were talking about gold over 4,100. Breaks above the 9 again, and then you kind of just rode the 9, and there was a good trade there. So I think a lot of gold's commentary or what gold does is going to be based on what Powell says on Wednesday, and then that's also going to determine the direction of rates as well. So I think that the dollar could find strength. However, you got to get a little bit more macro. Some of the European data last week was actually decent, which put a little bit of a bid into the euro. So the euro is choppy sideways, but I would say Powell's commentary, we're getting rate cuts. I'm more in the camp that rates will likely be lower going forward over the next 6 to 12 months, and I think that's where we'll end up. So the dollar will probably could continue to be weaker because I think that maybe that's foreshadowing that we're probably getting more rate cuts and rates could reverse. So
Yep. No, I agree. And then I can't remember. I know I mentioned to it earlier, but I can't remember if it was a few weeks ago or a few months ago, just about an article that came across. I'll have to see if I can find it again, just about Morgan Stanley saying that for the year 2026, they're expecting, 5 or 6 rate cuts.
well,
And
here real quick, you know what we could do is pull up one thing I love to look at is the for those who don't check this out is the Fed Fund watch tool on the CME's website. Now let me just go here real quick. I'll pull it up. Just something to talk about for some macro ideas. But this, so obviously right now, 88% chance they're going to cut, which it's priced in. When you go to looking out further for the probabilities in the next year, zoom this in. As you get into the middle of next year, we still got maybe another two cuts from here in next year, maybe three into the end of next year. So there's, if you look at the way the futures market's priced, I mean, we're pricing in another two, potentially three cuts into
Mhm.
26. So if we take that narrative and say that that's probably going to continue, rates probably go lower. Although in the short term, like we're talking about, could be a headwind for small caps if rates go up. But small caps probably do end up breaking out as long as the economy stays good and rates continue to come lower. There probably will be a trade where small caps do go to all-time highs as long as everything stays intact. If the market's bullish, economy's good, data looks good. I'm in the camp that if rates do come lower, small caps will be a great trade in 26.
Yeah, no, I agree. I think 2026 for small caps, and not a lot of people honestly that I know of on our spaces and stuff like that. Not a lot of people like to look at the Russell or trade IWM. Personally, I like the way IWM moves sometimes. I really like how outside of, your normal things that people like to look at, your AMD, your Nvidia, your Meta, Google, Microsoft, whatever it is, and then they're getting chopped up back and forth. Some things are going up, some are going down, whatever it is. I'm like, dude, just go look at IWM right now. Look at the relative strength that it's having or the relative weakness. Just go look at some of these, individual names. And I think 100% IWM, even if you look at IWM on,
Pull
if
that
you
up.
can pull it on a monthly chart. I mean, tell me
Yep.
that doesn't look like this thing is absolutely going to run next year. Like, I
Yeah.
mean, this thing just
So,
looks absolutely incredible.
well, if you look at it from the big picture, like you said, we pull up this monthly. Let me zoom this in. We had remember the S&P and the Qs have ran to all-time highs. The Russell was left behind. And a lot of this damage was during the rate hike cycle during 22 and 23. We had rates going up and the Russell went sideways for a while. But I mean, when you look at the monthly chart and you say you got all the moving averages below you, they're sloping up and to the right. You're right close to all-time highs. Any pullback as long as we stay above the monthly 9. I mean, this thing looks good, and if we get more rate cuts, that's only going to help small caps. And one trade you could see is if we do get rate cuts and things, you may get the Russell outperforming the Nasdaq. So with with the potential that
I think we could see that in 2026.
exactly. I agree. I think the Russell, if you're in a rate cutting cycle and the economy stays good and we don't start missing on jobs data or anything else where things the macro level stays pretty good, I really do think your small caps could be one of your best performers of 26 in a rate cutting cycle. If they're going to cut two or three more times, I mean it's definitely going to help the small caps. There's no doubt about that.
Yep,
So that thing looks good
absolutely.
as long as it grinds kind of sideways from here to the right, and then we break and we break with some force to the upside. I definitely do like the small caps with rates coming low over the next year. And here's the other thing: when Powell's done, the next appointee in under this administration is going to be more dovish. We know that already, so that's even another tailwind that would help small caps in the big picture.
Yep, I agree. I'm gonna go ahead and we're gonna look at a few crazy names. By crazy, just the ones that, just individual ones that most people are not so much looking at outside of your Teslas, again, your Nvidia, Microsoft, Googles. Just on larger time frame setups here. One of them that I'm looking at this week is Oracle, ticker ORCL. And the reason why I'm looking at Oracle is just because of the fact that one, there is something called a Morningstar reversal. This is one of my favorite bullish candlestick patterns of all time. And what I like to see is I love to see this candlestick pattern come in after a huge move to the downside. If you look at freaking Oracle on the weekly, it's had one, two, three, four, five, 6 freaking weeks of straight selling to the downside, and it's finally starting to show a little bit of life, and it led into a Morningstar reversal. Now, the one thing I'm going to look at, just this area right over here. This is going to be my SR flip zone. This was an area of resistance, went sideways until it broke above it. Once it did, it pulled back down. And then on the retest, buyers step back in. Fantastic. And then lift off. Big move back up. So they broke down underneath this. They went underneath it initially, closed it back above. You can tell by the top wick right here, they tried to push price action up. Sellers again stepped in and then closed it back down. Now getting the Morningstar reversal back up into that zone. So for me, I'm going to look for Oracle on this daily right here. Look where the daily 21 is at, 219.90. 10
Yep.
cents away from that 220 cycle level. So if Oracle can break in base above that 220 area and above the daily 21 EMA, I'm going to look for a move back up into the mid 230s to 240. So this is just something that I'm going to look to trade next week. And then if you go to the weekly chart, if it does, look where the weekly 9 and weekly 21 are sitting at. 234 and 237.6 area right up here. So again, breaking base, strength over 220. That daily 21 EMA, want to see 9 times out of 10. I joke whenever I say this, but it's worked more times than it hasn't, and that's one of the best things you can say about trading is whenever you see something and if you execute every single time and you take it 10 times and 7 of them play out, 3 of them don't. I mean, you have a 70% win rate strategy. This is one of those times where I see a lot of red candles come in and I see this Morningstar reversal. So I'm going to say 9 times out of 10, you do get continuation and a green candle. So I would like to see the green candle again move over 220 here and go retest the mid 230 area here on Oracle. So keep this
Full
name on
disclosure, they
watch.
do have earnings on Wednesday, by the way,
They
so
do.
December 10th. So just keep that in mind as we're talking about this. If you're going to trade it, remember they do have earnings on this coming Wednesday. Who else? What's the other? There's another semi that has, I think, earnings on
Let me see.
Wednesday as well.
Here, I'm just going to go through it real quick while we're talking about it. Nothing on Monday. Tuesday, you have AutoZone, GameStop. Wednesday, you have UEC, you have Chewy, Oracle, Adobe.
Adobe and Synapses.
Yep. Thursday, after the close, you have AVGO,
Yeah, Broadcom's the other
Costco.
one. That's right.
Yep. Yep. You got AVGO, Costco, and then Lulu. Um, Lulu's actually another one that I'm looking to see if it continues to the upside as well that has earnings. So for for me, I do not like to trade options on names that had just reported earnings. So if it reports on Wednesday, I'm probably not going to trade this name on Thursday or Friday. I'll probably let it fizzle out for a little bit and then come next Monday, look into Oracle for a potential trade. Now, the thing with earnings is that sometimes we like to talk about going into earnings, you see an earnings run up or an earnings dump. So Oracle, best case scenario going into the next um, 2 or 3 trading sessions, you see the move on Oracle go above 220 and get the move to the upside to target area, honestly, in the mid 230s for a pre-earnings run up and let this chart play out. And then whatever happens after earnings is out of, my control by that point. Not going to say that chart technical analysis doesn't matter when it comes to earnings, but most of the time it just goes out of the window because earnings can be a complete gamble. You can have positive numbers come out, the stock can go down 10%, vice versa. You can have negative numbers come out, they can do a double miss, and then all of a sudden the stock's up 4 or 5% after hours. So make sure you do know that just because you're bullish on the stock or you really like the stock and you believe they're going to report good earnings and good numbers doesn't necessarily mean every single time that happens the stock's actually going to react in that positive way in that direction. So that is something to note there on Oracle. And just because I mentioned it, we'll go ahead and look at Lulu. And this is the only reason why I'm looking at Lulu. Very similar to Oracle, other than on the daily chart for the 21. The weekly 21 is right here at 192.50 after it just put in a base of support right down here after a huge fall to the downside. If you look at Lulu, go to your monthly and zoom out. This stock has been obliterated on the monthly chart and it just back tested this area here. Whoopsies. Meant to grab the box. Just back tested this area here, and now it is coming back down to the low from freaking April of 2020. And if it can break and base over this after this overextension to the downside, I mean, risk to reward. I mean, looking for even leaps on this thing after this for whatever reason. If you love Lululemon, I don't know if you're bullish on yoga pants or not, but I mean, this could be the play for you. So.
Yeah,
I mean, it's
there is a gap fill right at what is that 197. I go from the bottom of the wick, or one. What is this candle here? 190, 197.67. From
197.67.
Yep, from September 4th. So
Yep.
it's likely now that we've cleared this previous high around that 187 that we should likely fill up that gap. So that gives you about a $7 worth of room to the upside on that trade till that gap gets filled. So I think that that one looks good on the daily 4 hour. I agree with you on that one. Longer term, yeah, I mean a move. If you look go back out to the weekly, like a move back to that like 226 area where those lows are. I mean that could definitely be in the cards if we can get back above the 21 weekly and start to get some more constructive price action to the upside on that one.
Yep, absolutely. So here it is right there. So it built the base right there at 160, and now it's testing that weekly 21 with the daily gap fill that's right above it. So fills that gap, continues to hold this base. Obviously, they have earnings. So if you're looking for a swing position for elites or whatever it is to buy the dip on this one, if you end up entering into the position, obviously you know that they do have earnings. But the target zone above to the upside after that gap is filled and it starts to move above and reclaim the weekly moving averages again. I just marked an area right there from 220 to 226. That would be my end up target area there for Lulu.
Yeah, and
So
a
keep that
trade
one on
setup
watch.
you could do because that bottom's pretty defined for call it 5 6 months now, maybe even a little longer. You could, if you want to take a position, go out 90 days or 120 days, a little bit longer. Maybe you don't do leaps. You want to do something a little shorter term. You could sell puts, kind of at those lows or put spreads. And then, I would like, some type of call spread up into that 226 area, maybe like, 200, 225 or something like that. Because obviously you are going to have some overhead supply to deal with. But a shorter term swing position, you could do something like that where you're selling some premium below the market to try to take advantage of some call upside. But you definitely
Another
will have some chop and resistance to get through once you get above that 226 to 230 area.
Yeah, and another good thing too, I mean, it can be a good thing as well, but if you do look at the monthly, right, on this thing, and it looks like absolute shit, and kind of what Will's talking about is selling cash secured puts or selling a put credit spread on this stock. Now, if you can, depending on the ticker, depending on, the IV, and how much these contracts are potentially juiced and how much the premiums are. With this being overextended to the downside on the monthly, getting yourself, a little bit of time, but going far out of the money, depending on whatever you can get on Lulu. Say you can even sell down to, 160, 140s, whatever it is, and get a decent premium on it. They do have earnings coming up.
On
So
Thursday,
if
right? Yeah, they have earnings
yeah,
on
on
Thursday.
Thursday. So even buying, puts or doing a put credit spread for a few weeks out or a month out, whatever it is, and they report their earnings. If you can collect some really good premium on that, and say that the stock actually moves to the upside, which is going to be in favor of your put credit spread, then you're solid on the fact that they potentially either IV crush everybody. It doesn't meet its expected implied move for earnings. It goes up, down, opens up flat the next day. I mean, all of those contracts, they're going to lose their value. Whoever traded weekly contracts on Lululemon is going to wake up the next morning minus 99% of their position. But that's good for selling options such as credit spreads, because you want them to lose. Essentially, you want them to lose their value, because that's how you gain on it as well. The only downside, obviously, would be if for whatever reason earnings come out and the stock tanks even lower, breaking underneath these that monthly base that it did, then obviously potentially if you're put credit spread going in the money and losing on the trade. But risk to reward on where it's at and the probabilities of that happening, I would say, are probably good in your favor for selling puts on Lululemon. So
Yeah,
it could
especially if
be
if you
a swing
if
trade
you
there
like
for
the
selling.
name. Yeah, if you like that name and you like it lower, I always try to put my mind if I'm selling, naked puts or put credit spreads, like I like the stock at that level. So if you're picking a spot, you say, "Hey, I like it at 140 or 150." Uh, that's where you're comfortable owning the stock. That's kind of how I set my psychology up when I put those trades on.
Yep, absolutely. So another name out there is CoreWeave. So CoreWeave is another name. Recently had some downside, but now it's trying to find a little bit of life here on the weekly. So big move to the downside, and then end up. If you actually look at the candle here from November, it's all the way back from that March candle over here that it came down to. It held, closed a doji candle, and then a big, huge green candle right over here from last week's session. And then if you go to the daily chart, this is what that move looks like. So here's that base that it created right down here. It's a support. And now it just got to move back to the upside. It just crossed back above the daily 9 and is now above the daily 21. If you zoom out, look left on this previous base that it had back in August and September, it's between around 84 to about 89 bucks. And that is currently where CoreWeave is at right now. There is also a gap fill on CoreWeave up to 102.78 area. So if it continues, this is what I like to see. I like to see a break and base and hold of this area and then get the move up there potentially to go fill this gap on CoreWeave. So looking at this name this week, if it can continue to hold above 84 bucks, would be my risk. You have the daily 9 below it around $80. I'm not sure if I'd sit back into that trade to let it pull back down to 80 bucks. I'd probably honestly exit for a loss and just let it kind of play itself out, give it more time. But just going into this next week, if it does continue to hold above the daily 21, but especially around 84 area with being my risk, target upside between 98 and 102, give or take, just right at 100. I mean, you're going to give yourself potential. I mean, $84 being your stop, entering in around 88 bucks. $4 risk downside for potential $12 upside. So now your risk reward ratio is 1 to 3, which is good. In my opinion, I don't think any trade should be less than 1 to 2. So with what it has right now, looking at this chart, it does offer a potential 1 to 3 risk reward ratio for a swing for that gap fill potential that's up there. So I do like the base that it created. I like where it's at right now, reclaiming the 21 and up in this previous zone right here. As long as it continues to hold above it and doesn't step back down underneath of it, just show that buyers are present and then continue to get that move up. And again, going on the weekly, this is essentially what it would look like. And if you look at where your weekly EMAs, your weekly 9 is at 97 and your weekly 21 is at 103, which is going to line
Right in
up
the gap
directly
fill.
near that gap fill of that zone. And that's why it's going to be target upside. So I think there's a little bit of opportunity there. So That is, again, CoreWeave, ticker CRWV. I like that one.
Yep.
Um, let's see. I mean, I have so many other freaking charts, but I'm not going to cover a lot of them. I'm quickly going to say this, though. Okay. Ticker KO. Nobody loves trading Coca-Cola and Pepsi more than this guy right here. I'll tell you that. I love trading
That is
KO
a
and
fact.
Pepsi. And 9 times out of 10, it is always calls. But I'll tell you right now, looking at KO, just zoom out, look left from September 2024, April of 2025, and where it just printed almost, I would say, I'd almost classify that as an evening star, which is obviously the evil twin brother of the morning star reversal at the bottom of a downtrend. This would be an evening star at the top of an uptrend, which it did just have a really nice run back to this resistance. And again, previous price action shows this is where sellers are stepping in, and what do each time? They slam that price action back down. So if you go to the daily chart, it is sitting directly on the daily 50 EMA. And if you just mark the lows down here and put a trend line for the higher lows, it is sitting directly on it at $70 to the penny is where it closed out. So if KO, my baby, decides to break and close underneath this trend line, underneath 70 bucks, I am going to look for a potential swing short on this name back down to $68. So as much as I hate to say it, and that $68 area is actually going to line up with a weekly trend line area right here. If you go from October 2023, January 2025, this is going to be October 2025. If it breaks the daily trend line, target is actually the weekly trend line right down there. So again, as much as I hate to say I might be trading puts on KO, I do like the opportunity there. The weekly 21 is at 69.73. So it's 20 cents off from that $70 psych level. If that spot breaks right there, I'm absolutely going to look for downside there on KO. And not to hate on this bad boy either, because I love my Pepsis as well, but mark those same thing, the higher lows for the trend line. It's underneath the daily 50, 9, and 21. It's hitting this little area of support right around 144, 145. But again, if it does start getting, and here's the weekly chart, so lower highs, here's the higher lows, and it's sitting directly. The weekly 21 is at 145.21, and the stock closed at 145.02. If that gets a close and break underneath that, going to look to come back down to about 141, 140. It's going to be the lows from November, which is going to line up with this right here. So again, as much as I hate to trade and talk negative on KO and Pepsi, because I love trading these things to the upside and catching these huge moves, there could be some opportunity for downside if they do not bounce right here. So keep those two names on watch going into this next session. And this is the last one that I'm going to cover just because I could stay on here forever and talk about all these other charts. But Dell. Um, Dell's looking good. It had this base back in September right over here around 117 area. And if you drag that over, it's exactly where it just hit again. It is now back above its daily moving averages. If you go to your weekly, after it hit that double bottom right up here, it is now back above the weekly 9 and 21. Not only that, if you go to your monthly, all right, go to your monthly chart. That double bottom on the weekly, it hit the monthly 21 EMA, which is currently sitting at 117, 177. This is a beautiful morning star reversal. This is what you love to see. 9 times out of 10, next candle is green for follow through. It's exactly what it got. So now it is back above after bouncing off the monthly 21, is above the monthly 9. Not only that, it is in a squeeze on the monthly as well. So if you go over to the TTM squeeze indicator, it was in a squeeze that was moving to the downside. And that is during this time when it was climbing to the upside, and then it got this red candle and it never fired to the downside. And as it was moving up, your MACD was actually bearish during that time, and your RSI actually had some bearish divergence, but it never crossed underneath. Well, actually, it did briefly. It hit 49 right there at the neutral level, and now is went back up to 70 and pulling back down. But you do have this divergence right here. The only thing that I'm looking at is to see if it continue to hold above 50, get the push back above 70 on the RSI. MACD continues to stay positive, but that monthly did not fire to the downside, and it just flipped bullish to the upside. So, in my opinion, I think what's going to happen with Dell is that MACD continues to stay bullish. RSI will continue to stay neutral and start to climb back up to the upside as price action moves up. The squeeze indicator will then continue to climb higher on these light blue bars essentially and get the squeeze to the upside, which can send this name potentially, speaking into existence back up to 160, 170. But going into next trading session, I think you're going to have a hurdle around 145 area right up here. This is going to be an SR flip spot from October. So even for a weekly trade, if you catch a really good move on Dell holding back above the daily EMAs, it's above the daily 9 and 21 right now. If it continues higher, I think 145 can be a great target. I think if
Yeah, the
you do
50 days
see,
right at call it 144 on Dell. The
oh,
50-day
is it?
moving average. Yep.
Nice. Yeah.
So
So
that fits
if
perfectly
you
with that narrative.
if you see a break above that 145, a break in base, and buyers continue to step in, I think it's a matter of time where that daily chart starts to set up and it keeps building into the weekly. At some point in time, there's a weekly squeeze right here that's already starting to move and it just flipped to the upside, will continue to climb up. And then once it does, it will then fire. And then you catch your big move here on Dell, which again could send it back up to these previous highs of 160 to 170 area. So
Yeah,
I
you'd
think
almost
this
look
is
for
another one.
if we test that 50, we close above it and then come back and maybe retest the 50 after we've closed above the 50-day at 144, and then you push through that 145 area. I like that, and then you target the all-time highs. What is that, 167?
Yep.
So
So
that
in
most
a
previous high.
Yeah, so in a perfect world, I can get, January 16, 2026 contracts, and I get the move up to 145, a breaking base above that. And if I see buyers start to really step in and it does that breaking base over the daily, and now your daily's looking even more bullish, and which is leading into your weekly chart looking bullish, and then the monthly is already in that squeeze that's turning to the upside. I'd honestly start to look at potentially some farther expiration on Dell, maybe later in 2026. At that point, maybe even January 2027, to get the move back up to the 160, 170 area on Dell, and then see if it continue to run after that for all time highs. So I think there's a play here within the next week or two for at least a move up to that, but just overall for the stock and the chart itself on a really, really large time frame, I think it can lead into something even more for a potential long-term swing play and get some leaps on this name. So keep an eye on ticker
Yep,
Dell as well.
like that one. I was gonna say, if you want to bring up the other one we talked about was DUOL, Duolingo.
Oh
I think
yeah,
there's a play. We talked about this just before we
yeah,
hopped on, but this chart looks good. I mean, you had a big breakdown on that earnings, and you're kind of forming this rounded bottom. You kind of got a cup and handle forming. We got an uptrend going. We get above these the 21 here on the daily, and then all of a sudden you have a huge gap to fill all the way up there at 257 roughly, or 256, whatever that is. So there's a potential you could have a big run if this thing breaks above that 21 and you see buyers stepping in. We get acceptance above that level. Once you get in that gap, you could make it. You could make a nice run. So this could be something to keep on your radar if you see some strength in this name.
yeah, absolutely. I mean, this is another thing too, similar maybe to to Lulu, where one, they don't have earnings, which is good because they already reported their earnings, the reason why we have the gap here. But selling a put credit spread, selling puts on this name after this huge, because look, I mean, look where it just bounced at right here, right? That base where it just formed that rounded bottom. You highlight that base, and we're just going to drag this over, drag it over, drag it over. Look how the stock reacted the last three times. This is February 2024. This is May 2024. This is most likely what? August? Yeah. In August in 2024. And the stock end up, both of these two times, it went to the same high right up here. And then this time over here, I mean, it just didn't even make a pit stop in that zone. It just ended up ripping above it. So again, highlighting this zone right here where it's just forming that base off of, um, whoopsies. I just closed that out. There we go. Again, I think risk to reward looks really good right there. I think you can sell some puts. You can potentially do a put credit spread. But again, at the same time, starts to get that move back above the weekly, or is it the daily 21? But that high from November, which is 203.77. So essentially, we'll just say 204 psych level enters into that gap. I mean, risk to reward holding over the daily moving averages in 204. Again, that gap fill takes you to freaking 260 to the penny, is actually the high of that gap. Um,
Yeah, you could get in there. You could do. I mean, I like if you set up some call spreads in there. You could do that once we break out, or if you're if you're more advanced options trader, the other thing you can do is do some. I like ratio spreads in that level, so you could buy something like the 220s or 230s, and then try to sell some additional calls up above into that resistance zone up there in the 260 area or 265 to try and cut some of the debit on your calls. But those will work out great. There's a couple trades. If you get acceptance up in that zone, above that area, and we start to break out over those highs, and now you're above the 21. I think that could be you might get it because there's no structure through there. It's very thin because of the earnings gap down. So now all of a sudden, that thing could make a run. If you get buyer step in, you're going to get people jump on. That thing can move fast.
yeah, I actually just took a screenshot of this one, and I'm gonna upload that into the Discord just to make sure I keep that on watch and put it actually on while I have it
You want to
here.
run through? I mean, I don't know how much time you want to go, but I was just thinking you want to run through the majors like the Mag Seven stuff and just the big names, just to kind of put some bigger
Oops.
context on where all those names are, and everybody looks at them
Yeah, if you want,
frequently.
let me add that to that watch list there. Let me drag this up. Um, that's all the main ones. Dadgummit. That's all the main ones that I wanted to cover. We covered a lot of good charts, a lot of ones that are looking for larger time frames. I think provide good risk to reward for potential swing trades, like the core weave chart, like your Oracle chart with that morning star. So those are the main watches for me. I'm probably going to trade this week a little bit lighter on the normal names just because of FOMC on Wednesday. So again, like Will gave that breakdown for all of the sectors. Make sure you're watching those sectors, just see which ones are providing relative strength and relative weakness. Capitalize over on those names, on those stocks. If you can on Monday and Tuesday before FOMC, and then maybe just sit back and relax. If maybe your other names are your technologies maybe back and forth or sideways, but capitalize where you see the money and the volume at. But with FOMC being Wednesday, obviously the market's going to be waiting in anticipation for that and how the market reacts to it. You may not see a lot of big movement on your main names, but yeah, so that's my plan for the week on why I'm looking at some of these off the wall individual names that a lot of people aren't going to be looking at. But
Yeah,
that's
it's going back to the sectors, like we said, the first handful I pulled up, which is obviously technology, financials, consumer discretionary, and communications and healthcare. Those probably five. If you're seeing relative strength in those five sectors, obviously that's bullish for the market for the indexes. And then that's probably inside of those sectors. If those charts look good, you probably want to go find names inside of those certain sectors that you can trade inside of those. Obviously, the ones that are more choppy, like industrials or staples or utilities, don't look good right now. Those are the names you want to stay away from. But you really want to check those sectors on a daily basis. I love when I'm watching, especially if you're day trading, if you're looking at futures, look at the sectors, see how they're trading during the day. And if you start to get where, financials is down and technology's up and healthcare is weak and you start to get these divergences, that's when you can start to say, hey, maybe there's no trade. Maybe you sit on hands. Maybe you wait because you got, if all the sectors aren't going in the right direction or together, it makes for some more choppy trading. But
Yeah, yeah, absolutely. I'm
I
gonna
was
go
just,
ahead. I'm gonna
yeah,
flip it
go
over
ahead.
to your screen real quick though.
Sure.
We'll let it run for another 10 minutes here because we're coming up to 10 o'clock. If you want to go over Max 7.
Yeah, we'll start with I'll start with Microsoft. This one we talked about a few weeks ago. I talked about this area around this 495 area. I said if we do break it, there is probably a trade down to that 200, which we did. We tested it. We've rallied back up kind of the to the breakdown area of that 495 level. And now we had some news. I know there was some news on Microsoft last week where we kind of pushed back lower that they lowered their AI sales quota, and then that was said it wasn't true. But just from a broad market perspective, Microsoft needs to get some relative strength back above this 495 level. Or when you look at the broad market context, like, hey, if we're going to go trade to all-time highs, you're going to need some of these bigger names to participate, right? Especially in the Nasdaq 100. Nvidia, this is another one that's been very choppy the last few weeks and has shown, I would say, relative weakness in relation to the rest of the names. You're below the 21, you're above the 9. You've gone sideways around this 180 to 185 area. You're still below the 50 at 187. So I'd like to see Nvidia get some relative strength to the upside and try to reclaim that 187 area, which is your 50-day. Is probably what you need to get. I'm just trying to look at these holistically and say, hey, these names need to participate because if we rally up to the all-time highs on the SPX or the Nasdaq 100, and these names are lackluster, you need these names to participate and show relative strength to boost you through those levels to go to new all-time highs, I think. So, what about Apple? I mean, Apple's had a good run. Moving averages up into the right. We're pulling back into this level around that 277 area. So watch that. You got the 21 right below you at 275. If we stay above the 21, you do have some horizontal support here to your left around the 275, 277. So Apple could be in play against this area right where it's at. If we get a little bit pushed lower this week, I think maybe this could be a buy, and maybe we push back to the upside. What else we got here? Let's go Tesla. I know everybody likes to talk about that one.
That weekly chart looks good.
Yeah, if you look at the weekly, you got the breakdown. I would have loved to see, you kind of had this double top area here. We pushed up against this, call it the 460, 470 area. We failed, came down, broke below the structure at around 400. You tested the 21 weekly. I would have loved to see, I know we talked about this over and over. I'd like to see that on the daily. I would like to see this get filled up, this structure in here. I know we filled this gap right here. I would have loved to see us come down in that 350. I would have been really excited to buy this down there. We went sideways, but you know what? A lot of relative strength. We got acceptance back into the range above the trend line that was broken at the 430 area, and that's propelled us higher. So now, sideways. We are getting a little stretch from the moving averages here. I'd like to see the 9 catch up on the daily. So if this 9 keeps rising and price goes sideways and we get the 9 to catch up, obviously that the target area is going to be these highs up here around that 470 to 475 on Tesla. What else we got? Google. This one, this one has been an absolute monster since, middle of the summer, sideways and to the right and up at a 45-degree angle, which is what you love to see. Still trading above the 9. This honestly, it's a bullish chart. You gotta love Google. We stay above this 9 and we start breaking above. That thing could still go higher. That's another one. What else we got? Netflix. I know we talked about this one. Is You had some news about the Warner Brothers deal. I don't know if that news is gonna stick. I did see I think it was something from might have been
Dude, there
Trump saying
it was
something that
Trump. Trump said that that deal is,
yeah,
like, not good.
yeah, dead on arrival or something. Yeah, I did see
Yeah.
that. So, this one has been tough, right? I mean, you had the breakdown below the 200. We had some support levels here around 106. We tried to hold that area. We bounced back up, failed at the 21 moving average, and now we're trading back lower. So this one, I don't, I wouldn't touch this thing. I wouldn't trade it right now. That's just probably not something that's on my radar. I think you stay away from that. Probably pull up Robinhood. This is another one, just a high flyer, high beta name. We broke down this 106. I think App and I had talked about this area a handful of times. You had this gap fill down here. We've rallied all the way back up. We're right at the 50-day. So watch this one around this 50-day moving average. If we can get some bullish price action early, this could take us higher. If we start to resist and roll back over below the 50, that would be maybe a little bit more bearish in that one. What other? I'm trying to think. Apple we covered. AMD. This is another sick one. Back to Nvidia. And you talk about sideways action, and here on AMD, as we zoom in here, you know, below the 21, right at the daily 9, sideways action. I'd like to. We didn't fill this gap all the way down at just around that 187 level. I'd like to see it get some strength this week again. Another big name that needs to participate as we go to all-time highs, if that's going to be the case. And then I think the other one is Meta. So
Yeah.
Meta, we talked about this, I think at length. When the price was coming down, we talked about this level at around 600 as a psych level, and
If you go to your monthly chart on Meta
yep,
and then just draw a trend line, right? I mean,
the bottom down here.
like Meta was absolutely a I tried to trade it twice and I missed it both freaking times. Is it let me see.
Yeah,
Let me
I
see.
guess
Weekly. Go to the weekly chart, sorry.
Okay, I was gonna say, yeah,
So
weekly.
yeah,
That
if
probably
you go
looks
to your
better.
weekly chart and hit the low from October 2022,
Oh yeah, way back here. Yep,
and then the trend line will hit the April dip in the market.
it should be
Yeah.
here. So it has been broken. Obviously, is that where you're going with this?
Yeah.
Um, so when we look at it on the weekly chart, you broke below trend, right? Now you've rallied back up to these moving averages, which I would think are going to give you some resistance here. The real level is going to be at the 700 level. You got a lot of overhead supply here. You have the 21 weekly above you, and then when you go to the daily, you have obviously a huge gap from the earnings that still is not going to get filled. The bottom of this, I mean, your gap's up here at 743, but
That gap is insane.
it's a big gap. But you have a falling 50-day on Meta. You have the 200 period right here. So if we can get acceptance back above this level, but you're going to have this high right here around 680, 681. Uh, if we can go sideways and consolidate up here after this big move, but you got a lot of gaps on this chart. So, there could be
Meta's a tough one just because when I look
it's
at it, I'm like 680 is going to be tough, but 690 is going to be tough. 700 is going to be
yeah,
even worse, and then like you
this
just got that big gap. I'm like it can be it could go so many different ways.
yeah, this whole I mean, really it's like, this whole area right here above you is going to be trouble.
Directly
As
in the
we get
middle of
into
that entire gap, the back test of that trend, like just there's so many things that can happen as it goes up into that area.
Yeah, if you caught this move, if you're long into this move up here, I bought in the around the 590s. I had bought some call spreads. I had sold some puts down there around 500. Um, and I trimmed a lot of that position on this gap up around the 200. That was really my target. I said I want to see a trade back to the 200 period. And then now it gets much choppier as you look above you. But when you start to put some of these big names together, like we just talked about Microsoft, we're talking about Meta now, AMD, Nvidia, all the charts don't look that good. in my opinion. So when you start saying where, if we're going to go to all-time highs, you need these names to participate. You need that relative strength. I mean, Google's obviously the standout. That one's the best one, best looking chart out there. But you start to look at some of these other bigger names, Netflix, Nvidia, Meta, Apple pulling back a little bit, even though the Apple still looks good. They need to participate for the markets to go to highs. So I would say I want to see relative strength in the Mag 7 names. I'd like to see some more broadening. I'd like to see healthcare catch a bit. I'd like to see some of these other names, financials, maybe go to highs. And then I get more constructive on maybe we take out the all-time highs and continue to run. But if some of these names don't do that, I think I would be a little bit more cautious on being aggressive to the long side here. I'll leave you with one chart. Me and Casey were talking about this before. I'm going to go to weekly real quick. As we look at, I'm going to zoom this in. As we approach these all-time highs, okay? And I like to use the RSI as just a tool. And I'm not saying that I want to be bearish. However, when I start to see on big time frames stuff like this where you get lower highs and you're losing momentum on big time frames, these moves up into big levels like this start to make me a little bit more cautious. So I'd like to see us, if we're going to run to highs, we need to get some relative strength in a lot of these names, and we need to break out firmly above the all time highs. Because if we kind of dribble up there slowly over the next week or two, depending on what the news is this week or some of these earnings like Oracle or Broadcom or whatever it is, if we just kind of go sideways and we just kind of dribble into the highs and we don't get some firepower through them, that would make me a little bit more cautionary on being aggressively long. I want to see I like to see strength, and you want to see strength in a breakout. So when you get a breakout above all-time highs, you want to see strength. Big green candle, buyers accept, and they run it up higher. That's really what we want to see. So I just keep that in mind on the weekly chart. You see some divergence setting up in the momentum. The momentum is starting to fade a little bit, so keep that in your narrative. I'm a little bit more like Casey said. I'm more in I have a lot of cash in the portfolio. I'm looking for opportunities, but I definitely trading lighter. I do want to see the following week. I want to see what that non-farm payroll, that jobs data looks like. We didn't get the jobs data for October. Some of the data we've had is from September in the last few weeks. So we need to see what that jobs number looks like because I think that's going to have big implications for rates, the Fed, and then really what's going to happen in the broad market is where we go next.
Yep. Yep. I absolutely agree. Well, that's it for me, guys. Right at 10 o'clock. Perfect timing there, Will.
Yeah,
I just
yeah,
had someone come in the Discord. They said this SNL with Will tonight is amazing. They said this dude knows his macro, and I was like, I 100% know. Every time this dude speaks and he sends me charts and things like that, I take everything that he says into consideration because Will is very, very knowledgeable, and I just really like the way that he looks over at the market. Just one thing, he doesn't have a, if you listen to when he talks about the market, he doesn't have a bias on bull or bear. He's a realist whenever he looks at the market, which is something that I really, really like. And obviously, just listening to him here on the space, yeah, he 100% knows his macro, super knowledgeable guy. So if you guys are not following Will on X, make sure you do go over and follow Will on X. I'm actually going to go ahead and tag him now in the live stream. Again, if you're watching this on X right now, make sure you do like and repost the stream. But Will, again, brother, I
yeah.
appreciate
It
you.
was great. Yeah,
I
love
appreciate you
coming
coming on,
on.
man.
I love it. I love doing that. Like I said, I love definitely getting into markets on the weekends when we can kind of unpack some charts and go through some detailed stuff like that. I love to try to look at the big picture. I try to look at the macro narrative, and we talk about rates and we talk about some of these things that a lot of people aren't looking at. But you really need to understand that some of the bigger pictures, like a lot of people aren't looking at the Japanese 10-year bond and what that's doing and how that affects our rates in the U.S. So like those are the little nuances you need to look cross sectors. The other thing I look at, I talk about a lot. We're on the Wolf Stream. I look at credit, like, keep that in your narrative. Is HYG and JNK. Look at the junk bond space. That's one thing. I'll just quickly before we jump off, I want to pull that up.
Yeah.
I talked about this a couple weeks ago, right at the lows when we had that big reversal candle on that Thursday from the Nvidia earnings, and we went into Friday. And I was watching. The one thing I said is HYG started to trade higher, never made a new low. And I had said, I think I had posted that day that we saw some bullish divergence in the NASDAQ. And I said, if credit continues to go higher, it's probably constructive for the market to move higher as well. So just these are the couple things you can add to your toolbox when we talk about looking at the sectors, looking at credit, look at interest rates, and that will help you kind of paint your picture and help facilitate in your trading of what you're doing and the decisions that you're making. That you can just look at these charts and say, okay, these are some things that are confirming. I like the fact right now when I pull up credit and I look at high yield's higher. It's not at the lows. If this thing continues to go, sideways and up to the right, I like that for the markets to be bullish and go higher. If I see this start to dribble over and we start turning back towards the 80 level in HYG, I'd be a little bit more concerned in the broad markets if credit starts to break down. But credit's a big important one to keep an eye on just for your big picture stuff. So I'll leave it at
Yeah.
that.
I'm actually gonna go ahead. I remember you sent that to me the other day. I need to make sure I put that on my watch list. With the one that Will right there was talking about. If you didn't catch the ticker, it's ticker HYG. So
Yep.
make
And the
sure you
other one
throw that
is
on there.
they kind of move together, but is JNK, which is the junk bond ETF. They give you risk sentiment on what credit's doing because a lot of the times when you look back, we had that big October 10th move down on the Trump narrative that day. We had a huge sell off. Well, if you go back and look at this, I brought this up before that happened. I said, look at high yield credit as I drag over these candles. October 10th wasn't until here, this day, right here. This thing had been rolling over for weeks before that. Weeks before we got any of that selling pressure that came in through October and then came into November. Same thing here. We rallied back up. Boom, this thing started trading back to the lows, and we got those big, ugly sell offs in early November. So these are just credit typically from what I've seen over the years of trading. Names like JNK, HYG, they are leaders credit.
Oh, Will, I think your mic cut out. Unless it's me, but I can't hear you. Yeah, someone said lost sound. I think.
Lost sound. Not sure
Oh,
what
there he
happened.
is. I heard him briefly. There he is. Yep, I hear you now.
No. Anyway, sorry, I was rambling on and I wasn't even on there. My bad. But we'll wrap it
No,
up here.
no,
Just like I said.
no. It was just like the last I heard it quiet for like 10, 15 seconds. I saw you go.
Okay.
So we heard majority of it. It was just like the last like 15 seconds.
The other. Oh, you know what we didn't talk about, Casey? Just before we run, I think we got to bring up Bitcoin.
Oh
You know, we
yeah.
didn't. We didn't talk about that, but this, as we said on Friday, this thing is a big risk sentiment indicator, in my opinion, and the fact that this thing has really not bounced the way the rest of the broad market has, I just think that we need to keep that in the back of our mind that if we don't get Bitcoin back above, whoops, I'm not even on the right. There we go. But if we don't get Bitcoin back, above 94, and right now we're trading right around the 91.2 level. I just think for risk sentiment, if this thing starts to roll over, uh, I would watch that because that could have implications for the broad market as well. I'd like to see personally, I'd like to see that retest of this right around the 100 level. We get back up to the 100, and we'll see. But we got to get back above 94.
I'll tell you
So
what, one thing that I've been doing is when the market's kind of not doing too much, I'll just glance over and go look at Bitcoin, and just looking at this what happened the other day, and I just saw it absolutely nose diving. And I'm like,
right,
okay, is this a sign for just something that's about to come here in a little bit and see, if the market responds. So I have to play a little catch up to the downside. But when I'm starting to like get iffy, I'm like, the market's not really doing too much right now. Let me go look at Bitcoin and see what it's doing, if it's ripping or if it's falling. Just taking that honestly into consideration now, which I haven't really done too much of before, but recently I started to.
yeah, I think just in the short term, like on the hourly, like if we get back below this 88,000 level, that's you got a trend line right below you, probably around 86. So if we see some relative weakness early in this week in Bitcoin, that would be a little bit of a cautionary sign for the rest of the market. It just seems it's been a good risk sentiment indicator for the broad markets, and we talked about it on the
Oh yeah.
stream quite a bit about Bitcoin was breaking down, uh, you know, basically in the last 2 months, and it's led kind of some of the volatility in the market. So if you're not watching
Yep.
Bitcoin on a daily time frame, or just keep the futures on the chart or whatever you're looking at, just to try to help get some sentiment. Because if that thing rolls over, we've seen it, like you just said, all of a sudden Bitcoin's dropping, and then market can sometimes follow. So
Yes, sir. Absolutely. I just sent a tweet out, appreciating and thanking Will for coming on to the stream. So in that tweet right there, I tagged Will in there. That is Will O'Hara 131 there in that tweet. Make sure you do go over there, give him a like, give him a follow on his account over there. Again, he's always on the Wolf Financial YouTube stream and on our X Spaces as well. Been an absolute pleasure having him come on tonight. So make sure you do go over to that tweet and go give him a follow on X. But yeah, Will, again, brother, I appreciate you coming on to this freaking live stream, dude. I 100% enjoyed it, other than having just people listen to me the whole time, having someone else on here. So I
no, it's
appreciate
good.
you
I
coming
love
on,
it. I'd
brother.
love to do it again. Like I said, I love the weekend analysis. It's really
Yeah,
good. I've watched your stuff. I'm like, man, I really like doing it when markets are closed and we get a chance to
yeah.
kind of unpack some stuff. And
Yeah,
and no, it's
absolutely.
really good,
I
really
like
good.
I like doing it on the Sunday night live stream just because one, usually around this time, people have already done all their main things for the weekend, so hopefully they can tune into this. But just doing honestly our homework, just looking at the market, getting a lot of things fresh on our mind going into the next trading session, the next week. So that's the reason why I do it, and I love when I can have people come on here and be a guest appearance and just maybe point out things that maybe I didn't see, and you just give me even more insight and something else to keep on watch. And hopefully, we did the same thing, just ping pong ideas back and forth and keep things on the radar. So, I mean, absolutely would love to have you to come on another live stream if uh,
Yeah, absolutely. We'll
if
do
you're
it.
down for it, brother.
I'm definitely down. I would yeah, we can make a handful of Sunday nights because I'm definitely down. I'd love to do the homework over the weekend, and I
Sweet,
think it's a great time to do it. So we'll
sweet.
go from there.
Sounds good. All right, guys. Well, I'm going to close up the stream. For the premium Discord members that are watching this, I will see you guys live in the morning over on the Discord side for the live streaming, live trading session tomorrow. I will be a guest speaker on the Wolf Financial X Spaces, and I'll be on the YouTube channel as well this week. We're probably going to do a full YouTube stream, I'd imagine, for Wednesday for FOMC. So make sure you do have the notifications turned on for the Wolf Financial page as well. I'll be over there. But yeah, if you guys want to come hang out in the Discord team with the Casey trades, it's not only myself, got a few other amazing trade analyst alerts over there for options, day trading, swing trading, and futures trading is where I live at day in and day out. I actually just posted a stat the other day. I've live streamed over 1,300 hours so far in the year of 2025, top 2% in the world on Discord for live streaming. So I spend a lot of time over there in my community. So If you guys want to come hang out, make sure you click the link in my bio. Make sure you use code KC30 at checkout, KC30. You get a 7-day free trial. Come hang out and just see if this trading group is for you. I always encourage people to surround themselves with other traders. It's 100% going to make the entire difference. So find a good trading community that you can connect with. If it's mine, it's mine. If it's not, it's not. Just find one. So we do have a 7-day free trial. Come check out the community, see if it's a place for you. We sing songs, we tell jokes, make fun of each other while looking at the market, trading and charting, making money every single day. So I love our premium Discord team. We have fun while we work, and we absolutely love what we do. So again, appreciate Will coming on here, and I'm going to go ahead and wrap up the stream. I'll see everybody tomorrow bright and early on Spaces with the Wolf Crew. But y'all take care and have a great night. Appreciate you, Will.
All right, man. Appreciate it. It was great to be on.
Yes, sir. Appreciate you guys. Have a good night.